All right, good morning. Well, today is Friday, April 12th, 2019. Happy Friday, everybody. Hope you had a good week and hope you have a better weekend coming ahead. It is the stock market today, reported by Chaikin Analytics. My name is Nick Webb. I'm substituting in for Dan Russo out on honeymoon. Today will be my last day. Dan will be back on Monday, so I'm sure he'll be fresh and ready to go. And we look forward to that. Friday also marks the start or the kickoff, the official kickoff of earnings season. And boy, did it kick off with a bang. So let's take a look at where we are today. So as of yesterday, the S&P came in pretty much flat, a little bit down. All the indexes were down. Small caps were also down slightly. We've gone over this a lot. Resistance still remains at that 2950 range where the S&P would have to hit new highs and break through that. So that's a solid resistance level. But right now, Chaikin money flow continues very strongly. It's coming back into the market. So that's a good sign. It means investors, institutional investors, are probably taking money out of the bond market, putting into the stock market. Now, markets in general have been in a wait and see mode for the earnings season to kick off, and it did. So what happened? Well, I'm going to start with the bottom bullet first because that's just in. It's hot news, just released. JP Morgan reported record profits this morning. The futures markets have taken off. Overseas trading of JP Morgan is going crazy. It's going to open very hot in the New York market when that opens at 9:30. As we said yesterday, we had a flat day while they're awaiting Q1 earnings season. Couple of data points from the economy that generally are pretty good news. First, unemployment claims dropped to historically low levels. This is pretty typical in a full employment economy. Employers really try and hold on to their employees. They don't do layoffs as willingly as they normally would. And they also try and keep employees happy, retrain them into new roles, basically keep them contained because they know finding new employees right now in this market is very, very difficult. So we are reaching that full employment saturation point, and this is a very typical reaction that employers make. The claims are actually under 200,000, which is really remarkably low. Producer prices surge. They were up almost above half a percentage point, which would be cause for real concern, except for the underlying core producer prices are flat. These two releases will give the Fed all the ammunition they need to stay with their sort of pause strategy, which they've been implementing this year. There is nothing in these numbers that would indicate the economy is overheating to a point where inflation is a real concern. As a matter of fact, the core PPI was absolutely flat, 0% inflation. So the Fed has all the ammunition they need to stay in place. As we already announced, earnings season has kicked off. JP Morgan has reported. It's a doozy. So hold on to your hats. I think this is going to give a lot of fuel to the market today. If we look yesterday, pretty much a dull day. I was kind of hoping for something on either side so that we'd have a lot of interesting material. So I have a lot to thank from JP Morgan. They're going to keep it interesting for us today. But all indexes, whether it's large cap, small cap, NASDAQ, technology, all of it was virtually unaffected. Stock of the day, appropriately enough, we pulled out Morgan Stanley. Now, again, this is not a recommendation. This is a computer-generated stock of interest. Usually, that's rated very bullish. So we pulled out Morgan Stanley. It's got great financials, great earnings. Technicals are okay, and experts are okay. My guess is today they will take off because JP Morgan, they will ride the coattails of JP Morgan with the expectation that if JP Morgan reports, really well. So will Morgan Stanley. Let's take a second, review how we read charts at Chaikin Analytics. First of all, we go with the very top left. We look at where it's rated overall. And as we said, it's very bullish. Then we drop down to the bottom part of the chart. Just take a look at the trend line over time. We've been neutral on this stock for a very long time, and then started to turn bullish in March, and we're now very clearly bullish. The next thing we do is then we look at relative strength. How's it doing relative to the market? It has been kind of underperforming, not surprising, the whole sector has, but you can see money flow is beginning to creep back into it. That's a good sign. Right now it's a little on the overbought area, but that may be something we sort of cast aside given the news of today. So net, good looking stock, maybe going to take off with the sector as a whole. So we'll see how that goes today. Where have the sectors been going? Not surprisingly, with oil prices soaring, energy has been top of the heap. Crude oil probably represents the major fly in the ointment for the market as a whole, because they have, if fundamentals continue the way they are in the oil market, there's a good chance that you'll see gas prices spike. You'll see a lot of energy inflation. And energy has been the culprit in a lot of inflationary bubbles. The Fed would have to move at a certain point. And at that point, they'll start raising interest rates, and all of a sudden, that'll suck some energy out of the market. That's my biggest concern right now about the market. You can see all the others have been falling in line. Staples, technology, communication, all doing very well over the last 5 days, whereas healthcare has begun to fall out of bed, and we'll talk about that a little later, and materials also. So the industry focus today, it's always an interesting one, and when it's aerospace and defense. There's some really cool companies in this industry. So over the past 6 months, it has underperformed. It had done great in the first 6 months of the year, and then the last 6 months it underperformed. Its power bar ratio, which measures future potential, not existing or past performance, but takes a look into the future 1 to 6 months, is saying, this is a good industry. 8 stocks are rated bullish, only 1 is bearish, and so this is an industry to keep an eye on. Very strong power bar. So today we're going to take a look at Astronics, because I thought it had a great name. So of the 3, I thought, hey, let's take a look at that one. I wasn't really familiar with it. It's an interesting looking chart. So again, let's go through the process. We take a look at the top left, very bullish. So it's got all the fundamentals in place. Over here, the power bar, you can see it's only recently turned very bullish. So we were actually bearish even before the drop happened here. But once the drop happened, we remained bullish for quite some time. We're starting to come out of it now in March and April. And so that tells you that there's some good future potential. You can see relative strength is still weak, but turning upwards. Money flow is actually kind of disastrous right now. A lot of institutional money out of the market. So if you look at it and add it all up, Chaikin is very bullish. The market is not so much, but not really negative on it, but not really positive on it. And the institutional investors seem like they're pulling money out. So this would be definitely in our world, that would be a wait and see. Trending yesterday, there were some interesting movers. And Fastenal is a good one because it shows what happens during earnings season. They reported earnings that beat estimates by 1 cent. That was enough to move them up 5%. And it was less the beat, more about some of the forward-looking statements that they made during their conference call that indicated that they were very comfortable with the estimates going forward, and they felt like they were in a good place. Kroger continues. They were on this list yesterday. The market really likes the new management, and the new management is already making steps to fill in some of the openings that were there. So they're moving very quickly. Your United Rentals is interesting because there wasn't really a lot of news on it, but it reports earnings next week. And I kind of feel like this might be some whisper noise out there in the market. If you look on the other side, some of the losers, really most of them fall in the healthcare arena. And that's because there's a lot of news out there about Medicare for all or increasing regulation on pricing. And basically, United Healthcare, Anthem, Centene, all of them were painted with that brush. So until you get some better visibility out of Washington, what's going on, this may be a very volatile sector. Diamondback Energy, the news out of that one is that they are flaring so much natural gas because natural gas prices have literally just tanked that, you know, natural gas prices are almost at zero at this point coming out of Texas. So I think that's really diminishing their price. Again, we've already talked about Fastenal. Commerce Bank shares missed by quite a bit. So they, I don't know exactly, I didn't look to see how their stock did, but I can't imagine it did particularly well. We already talked about JP Morgan. PNC is the other big name here, and Wells Fargo that are reporting today. PNC is in that bullish camp, so we generally expect those to outperform. Never know, but that tends to be what happens. Wells Fargo is neutral, so we'll see. They're obviously a very troubled firm. So a couple just bonus slides as we do that take a look at where the market's moving and what seems to be driving market value. So took a look at Russell 3000 growth stocks versus value stocks. You can see I just divided the growth index by the value index. So when it's moving, when this line is moving up, that means that growth stocks are outperforming value stocks. And when the line moves down, obviously the reverse is true, value is king. You can see for the year, it's pretty much moved completely up during this entire year. So growth has been outperforming value for the entire year. The only exception to that was when the market had its pullback or correction in Q4, value took over at that stage. They didn't fall as fast or as furiously as the growth stocks did. And that's pretty typical of the market in general when there is a pullback. So when you see the growth stocks outperforming value, that's kind of a bullish indicator. It shows that people are pretty confident in the market. They're not buying defensive stocks, and it could be time for the market to move up another stretch. And so, again, good for the market. The other thing I wanted to do is take a look at long-term treasuries because they've had the yields have had quite a fall, and it's something to reflect on because there are winners and losers in the market when this happens. Obviously, interest rate sensitive industries such as real estate, any capital intensive industry, any industry that needs to borrow quite a bit, so industrials, that kind of firm, those are going to benefit in this environment because obviously money is now a lot cheaper, particularly on the long side. And it's back to almost January of 2018 yield. So this means very bullish for those. In the financial institutions, less bullish, but obviously with JP Morgan reporting those values, that it's a good sign that they're able to overcome it. So that's the picture there. It's something to keep in mind because it does mean that capital intensive industries are going to have very cheap money for the foreseeable future. Airlines, which usually rent or borrow long to finance their aircraft, they're going to benefit from this as well. So just last minute plug before we say goodbye for the week or the weekend. It's always good to get Power Feed delivered in your inbox. Just go to www.chaikinanalytics.com/today. This email will show up in your inbox every morning right around 9 o'clock, so you're ready to go.